Tonight on Market Call, David Burrows, President and Chief Investment Strategist at Barometer Capital Management, taking your calls, emails, and tweets on North American large caps. Hello, I'm Michael Hainsworth in for Mark Bunting. We've opened the lines now. You can call us toll-free right across Canada on my dime. It's 1-855-326-6266. The internet is always an alternative. Market Call at BNN.ca is the old-fashioned digital way. In the new way, Market Call, as we monitor the show, we will keep an eye out for you as well. David Burrows is on the Twitter as well. Barometer CA is your handle.
You got it.
How are you doing right now?
Just great, thank you.
How are the markets doing right now?
I think the markets are behaving remarkably well. I mean, we certainly have had a strong market. You could get a pullback at any time, but the reality is that we've come through the three seasonally weakest months of the year with all kinds of news headlines, and all that the market could do was muster a 4% pullback. The market is behaving remarkably well. I think in general, investors, both institutional and private investors, are underweight equities. There's healthy skepticism in the market. Earnings beat by about 5% on the quarter, which is a pretty strong beat. And our premise is we have a very low growth, slow growth recovery, which means interest rates stay lower a lot longer than people expect. And in that world, dividend growth continues to work well.
I've been told that because the great rotation of cash from bonds into the equity market has now begun, and it's institutional money, that while we could see a market correction of, say, no more than 3 to 5%, it's the institutional money that will push us back forward.
That's the reality. When you have a price pattern, whether it's in a market or a single security, that is very uniform, it means there's a lot of buyers right under the surface waiting for opportunity to buy. And I think there's a lot of people who have been disappointed by the shallow nature of the pullbacks. So the pain trade is probably higher.
Since we're talking North American large caps today, do you expect that we'll see the Canadian equities continue to catch up to the Americans? Is there a pause that refreshes south of the border, or would you rather be stateside?
So if we talk big picture, we prefer developed markets over developing markets. So U.S., Germany, and to some extent Japan. But the reality is Canada is probably going to be more lumped in with developing markets. Commodity prices continue to be sloppy. Canadian market had a little bounce relative to the U.S. Over the past month. I think that's not likely to continue. I think U.S. market is likely to continue to lead, given the sector leadership in the market and the lack of those companies in the Canadian marketplace. And
we get lumped in with the developing markets because we are so commodity driven and the commodities are being bought by those developing countries.
You know, the only strong commodity in the complex was oil. And now oil has been pulling back as the political risk in the Gulf has been moving away. And as the production is ramping up in the U.S., I mean, very strong production growth of oil and gas in the U.S. So realistically, there's a lot of things that point to lower inflation, lower commodity prices. Canadian market probably not well set up for that environment.
Dow hit an all-time high today. It seems the optimism is that we will see a weak jobs report on Friday, which will lead to continued stimulus in the United States.
People continue to underestimate the determination that the central banks have to make sure we have confidence in the marketplace. And realistically, Ben Bernanke, as the student of the Depression, is determined to support confidence ultimately, which can ultimately flow back into the real economy. And it takes a long time. But now they're talking about moving the unemployment target potentially to 5.5%. Even at 6.5% at 180,000 jobs a month is 2017 before you get to the jobs target. I think higher rates or tighter policy is a long way off.
David Burrows is our guest. He is President and Chief Investment Strategist at Barometer Capital Management. We're taking your questions tonight on North American large caps. If you've got one, you can call us toll-free at 1-855-326-6266. We've got Twitter and the email box open as well.